Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of April the 18th, 2016. Now to get started, we're going to begin where we always do with the US dollar index. We can see that our key vantage point resistance currently comes in at 94, 94, 94.57 and 94.63 with a somewhat bullish close of 94.68, but this is largely due to a rally in the equity markets. Now we have massive trend line support coming in at or about the 95.20 mark, so we would need a clean break of the VantagePoint 18-day predicted EMA at 94.94 and a break of this trend line coming in at 95.25 in order for the dollar to move higher. Now what would trigger that is a break of the S&P 500 above 2100. That would actually probably cause the US dollar to rally, and we would see a further sell-off in the euro. So that's what we would be looking for. Now, our additional indicators from VantagePoint are not really supporting that theory that the equities are going extensively higher. Quite the opposite, actually. We can see our neural index turning back down, our predicted MACD firmly below the zero line, and our predicted RSI 45.5, which is actually bearish for the dollar. So again, the trigger that we would need for the dollar index to move higher is we would of course need those global equity markets to continue to move up. Now the DAX 30, we can see the DAX is coming in pretty strong. We've got a triple EMA cross taking place, but again we're getting a little bit stuck on this trend line right here just above this 10,000 mark. So I would like to see a clean break of that. If we get that, then we will see the euro US pair move considerably lower, but that will be the trigger for euro US to move lower. The dollar index will move higher and the global indices, particularly the DAX 30, must move higher, with of course the S&P 500. Now the S&P 500 has massive trend line resistance coming in just under the 2100 mark. So in order to confirm that we actually are going to go higher on the equity markets, meaning the dollar will strengthen against at least the euro and the Swiss franc and the Japanese yen, it will not strengthen against the Aussie, the New Zealand, the CAD, or even necessarily the British pound. So we have to understand these intermarket correlations, that the dollar index has its highest correlation to the euro, the Swiss franc. You know, these are the ones that are really going to take a hit, you know, and the Japanese yen, of course, if those equity markets strengthen. Now, the S&P 500 coming again, 2046, the key support level right now. We've been in this triple EMA cross for a very, very long time here. We are coming up against a trend line that clearly the S&P 500 is struggling with, hence the SH short this week on the equity markets. I'm not a believer we have a lot of strength above the 2100 mark. I think we're just about done on this rally. But again, you know, we want to be very cautious about playing overbought and signals. Now, our predicted MACD has been riding up at the 20 level for a considerable period of time. Our predicted RSI is basically no longer advancing. It's been going sideways for the last 4 days. You can see the predicted RSI running horizontal right along this trend line, and this is again looking for that needle in a haystack that will tell us the next direction here. So this is telling me that the next direction is likely going to be lower. So we want to keep a very close eye on that. Now, a potential trigger for that very well could be this trend line that I talked about in last week's Forex Weekly on light sweet crude oil. Oil continues to fail here, and if we break through the 40.53 level of the VantagePoint 18-day predicted moving average, oil moves lower. It is likely to drag the equity markets down with it, the global equity markets. So keep a very close eye on that intermarket correlation. And again, gold, as I've stated over the last several weeks, we're getting very toppy here, guys, very toppy. So, but we do have trend line support here. The key vantage point level 1238. We've closed below it at 1233. So not exactly a bullish setup, but we could see some buyers coming in right along this 1220 line. So watch that area to begin the week at 1220, 1218 very closely. Now, coming into our currency pairs, the critical vantage point level 112.92, we have closed below that, but we have to be very, very cautious of a reversal here. This euro trade is 100% 100% dependent on the equity markets going lower. So if the Euro US is going lower, the global equity markets must be moving higher. That's the intermarket correlation that you need to know and understand. The indicators here, the strength indicator is not telling me we have a whole lot of downward strength here on the Euro US currency. The predicted RSI starting to turn back up, and again that triple EMA cross trying to complete here, but it really is struggling right around this 1288, 1292 area. So to begin the week, by probably Wednesday of next week, of this coming week, we will know if the equity markets are able to take out the 2100 level. If the equity market, specifically when I'm making reference to the equity markets, the S&P 500, if it cannot take out the 2100 mark, the euro currency will reverse higher. The dollar will reverse lower. So that's what we need to be mindful of, and try and put away conventional indicators, Elliott wave, Fibonacci, all of these wild and wacky Gann theories. And intermarket correlation, guys, will trump it. So essentially, if we know that these equity markets are getting ready potentially to fail, then we were probably looking at buying Euro US, not selling it. So again, we want to make sure we understand those intermarket correlations. Now, again, if when we're looking at the US Swiss franc, we can see that pretty much has a mind of its own. It's not necessarily always running with the Euro US currency. So I would keep that in mind also. Right now, we do have a trend line break, which would suggest that we are going higher, but I'll point out that the triple EMA cross from VantagePoint is not completed. 96.37 is the key level, all the way up to 96.55, the 3-day. We've closed above all three of those. We are temporarily right now bullish, but I'm not sure we will be bullish into the mid and latter part of this coming week. And as you can see, the predicted short, medium, and long-term differences in the strength indicator very much struggling around this zero line here. I do like the position of the predicted RSI at 63, suggest we could get one more final push before it reverses. And the predicted MACD, this move looks corrective in nature. It doesn't look like a new uptrend. It looks very much corrective in nature. So be careful of this one, to say the least. Now, as we come into our British pound US dollar, this is definitely, guys, an oil trade. Oil moves lower and turns lower, and again, I can come back and show everybody this chart, how it currently looks on our oil contracts. You can see that they are turning down. We are failing on this trend line. If it turns lower, guys, then what happens here? The British pound turns lower. The Canadian dollar turns lower. So we want to be watching oil very closely this coming week if we're trading the British pound. Now, again, when we look at this, we're right up against this key vantage point level, 142.10. We have closed at 141.97. Oil breaks to the upside. That is going to take the pressure off the downside on the British pound. And I will point out that I've talked about the seasonality. If we look at this over the last year, that the British pound is normally very strong at this time of year. So, you know, right up until usually peaks around the middle of June. So, you know, we would be looking for buying opportunities on the British pound, but we need those equity markets going higher, and we absolutely need oil going higher with it, or the British pound will come under pressure. So our predicted MACD hovering along that zero line, no real clear signal there, and the predicted RSI, we can see here, I'm just going to drag this over so everybody can see this, 49.4. We're still below the zero line. We're looking for a momentum push from the predicted RSI above 60 or below 40 for this trade to get moving. And when it does, it will be a very easy trade, buying high and selling low. And that's what most traders, again, won't do. But we just need a signal here to tell us to do that. So the trigger is going to be oil. Whether it be up or down, that's going to tell us whether we're going to be buying or selling the British pound US dollar. Right now, shorts carry a slight advantage. Now, as we get into the dollar yen, we found a base here down around the 107.80 area. Now, we have not cleared this critical vantage point level, 110.23, the vantage point 18-day predicted EMA. You can see that we've come up, we've got dangerously close to it on Friday, and it collapsed by 100 and some odd pips on Friday. With my own direct clients, we of course are selling this, and why we're selling this is because the equity markets, again, have not really made a big push in 2016, and even when they did, the dollar yen still sold off. So it tells me the medium and longer term play in equities is down. And if that's the case, then dollar yen is going to move lower also. But again, it is absolutely a stock trade here. So right now it's warning us. The dollar yen could actually be a leading indicator for you futures traders out there doing the S&P, the NASDAQ, that if the dollar yen proceeds to move lower again, then the equity markets are likely getting ready to follow. So I'm happy to buy this pair once we clear 110.23, but right now selling into the 110.23 area while the S&P 500 is below 2100 is a reasonable play. If we start breaking above 2100 on the S&P, we would be buyers. We would be buyers of a break of 110.23. But as you can see right now, this is a very accurate call from VantagePoint to the downside, and we are simply correcting back up in a clear, broader downtrend in 2016. Now, looking at commodity currencies, USCAD has been just a wild card this in 2016, still moving lower, but again, it is an oil trade. It is an equity trade. As long as the equities are going higher, oil's going higher, USCAD is going lower, meaning the Canadian dollar is strengthening. The key vantage point level we need to retest and take this area out is the 130 level. When we do that, this pair will reverse back to the upside. Now, we haven't got that yet, so for next week, our intermarket correlations will be a driving factor of this particular pair, which is, again, the equity markets and oil. If those two reverse, US Canada, we want to be buyers of this pair immediately. Now, we have repeatedly failed on the VantagePoint 18-day predicted moving average, now coming in all the way down to 128.34, 128.99, and 130.04. Very bearish close at 120.18, so it suggests that oil is going to come out of the gate fairly strong to begin the week, but I would look for oil to weaken by, again, midweek. Same as the Aussie dollar. This is basically a commodity-based currency. If we're trading the Aussie US, we're trading metals, we're trading the S&P 500, we're trading gold, but a very strong correlation, of course, is the equity market. So as the equities have had a pretty good week last week, you can see so did the Aussie. But if, once again, I'm going to sound like a broken record here, the 2100 level is a big area that we make a clean break of that on the S&P 500, and then the Aussie currency will actually break out to the upside. But right now, that doesn't really appear to be what's happening. We're flattening out. You can see, just like on the S&P 500, the predicted RSI is flattening out. We are no longer advancing. We are just basically stalled right along this trend line. So we've 1, 2, 3, 4, 5, 6 times we have tried to break through this level on Aussie US to above 77.50, and we just simply haven't been able to do it. So there could be a very good short opportunity in here, guys, for next week. And remember, your key driver is the S&P 500 and the Nikkei, and even the DAX 30 for that matter, because if those start to sell off, then Aussie will follow it lower. The key vantage point level, 75.97. This is the area you want to watch, guys. If we can push back down towards this level, we want to break through first 76.89, then we want to break through 76.44, then we are likely going to come down and target this 75.97 area. If we can take it out, we will see a substantial move lower. What is it going to take for that to happen? It is going to take a sell-off in the global equity markets. That's what it's going to take. So as long as the equities remain firm, if the equities break out to the upside, guys, you want to get your longs in on Aussie US immediately because it's going to go higher. But if we start failing and start pushing back towards 2050, 2060, 2040 on the S&P, Aussie US is going to be back down at the 76 level in a blink of an eye. So very good potential opportunity there. Same as the New Zealand US. The New Zealand US failing again this week up at this upper trend line. And again, the vantage point lower level continues to hold here. And that key level now is 68.33, 68.67, and 68.86. Very bullish close with 69.19. But you can see that we are not actually making any new highs here. We need to break considerably higher on this. Our most recent swing high comes about 3 days ago, which we hit about the approximately 69, about the 69.52 area here, but that is not a new swing high. You can see that we were back here. If we come back over here to our current trend line that I'll point out it's been in place for the last 2 weeks that I've talked about over the last 2 weeks, going to that March 30th swing high, and that was at 69.64. So we didn't make a new swing high, which formed yet another new trend line here, right around that area. So 69.60, 69.70, that's your key level for next week. If we can break through that area, New Zealand US will go considerably higher. But if we cannot break through this area, it's going to come considerably lower, and that would likely mean the equity markets have sold off, gold is under pressure, copper, some of these things, basically oil, all these things under pressure. Aussie, New Zealand, the CAD will all come under pressure. Those are your three main commodity currencies, and that's going to be a problem here if that happens. But that also represents some very good potential opportunity for us. Also, if we can break through 69.70, get through this area on a clean break of the S&P 500, then we will easily go long. Right now, VantagePoint is tipping this slightly to the upside on a long trade. So, but it is not a given, not by a long shot, not until we break through, again, the 69.70 level. So we have a busy week ahead of us yet again, and once again, it's going to be very choppy, but as long as you know your key levels, then you'll be just fine.